On today's episode, we are going to take a look at two giants that reported earnings last night. The first one we're going to take a quick look at is Alphabet, aka Google. The stock price is up about 4%. And the second stock we're going to take a quick look at is Microsoft. This one's up about 1.2% pre-markets right now. So we're going to take a quick look at their earnings, see what happened, see some things I like, and at the end I'm just going to share my overall thoughts on both companies. So let's get started. So if we take a quick look at Google, their revenue was about $61.8 billion for this quarter. This was up 62% compared to the same time last year. And let's take a quick look at this article right here. YouTube revenue came right now at over $7 billion. That's up 83% from last year, drawing close to Netflix quarterly revenue, which was $7.3 billion. This is insane, right? This just shows how big of a platform Google is for YouTube is for Google, right? It's almost as big as Netflix and makes almost as much money as Netflix. Google also did mention that the TV is the fastest growing consumer service that they have. That is insane. YouTube Shorts, which is the company's TikTok competitor, just surpassed 15 billion daily views. The CEO also mentioned that that is up from 6.5 billion daily views in March. So you can just see the huge growth that this company is seeing on. So now we take a closer look at their earnings report, right? I mean, they see strong growth in everything compared to the same time last year. Strong growth in Google Search, strong growth in YouTube Ads, strong growth in Google Networks. But I do believe that same time last year, right, this quarter of last year was when it was affected a bit due to the overall COVID situation. A lot of places stopped advertising. So for them to see a huge revenue growth, what was it, 80 something, 62% year-over-year revenue growth is good. But I actually want to compare it to last quarter instead to see if there is growth compared to last quarter. So if I did this quick presentation right here where we take a quick look, and we're taking a look at last quarter's revenue, and we can see Google search ads are still up. YouTube ads is up almost $1 billion. So you can just see growth overall in everything, even Google Networks. You also see Google services up, even Google Cloud, right? Google Cloud is up over, I want to say it's probably over 10% easily in just the last quarter. So huge growth all around for Google. The final thing I want to take a quick look at was just how the overall income was coming out from these services. It is an improvement from last quarter compared to Google services, up about $3 billion or so. Google Cloud is still at a negative, right? And this is something that I think Google just recently started mentioning, was how Google Cloud was doing in form of operating income. It's still at a loss, but that loss is getting smaller as that revenue is increasing. So I do expect maybe within the next 3 quarters, probably 2 to 3 quarters, it would take for Google Cloud to either be breaking even or positive. Now let's take a quick look at Microsoft, right? But before we go there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So like I mentioned, Microsoft right now, pre-market is up about 1.3% as I am recording this episode. Microsoft, the first thing we're going to see is just revenue growth was huge, right? 21% year-over-year revenue growth. And they do mention that they're seeing strong growth in some of the new franchise, for example, gaming, security, and LinkedIn, all of which have surpassed $10 billion in annual revenue in over the past 3 years. That's insane, right? Especially LinkedIn, right? I mean, I feel so many people sleep on LinkedIn, but that one's doing really, really great. We're going to take a quick look at the growth. They also, I mean, the gaming. I'm impressed how much money they make out of the gaming now. And they're being very, very heavy with acquisitions. I want to say in the past year, they bought a nice amount of studios. They kind of did the Xbox Game Pass, which is like pretty much the Netflix of video games. I have it, and that's that I barely play games, and I enjoy it so much. And then security, right? All make over $10 billion in annual revenue. So that's huge growth. If I take a quick look right now at their presentation, right? Let's just jump into their presentation. I just want to share some of the highlights from there. First, you can see, right, for those not familiar with Microsoft, they have three major segments. They have the productivity and business process. This was up 25% compared to the same time last year, and it made about $14.7 billion. They have the intelligent cloud, which made 17.4 and was up 30%. And then they have the more personal computing. This is 14.1 billion, and this was up 9% compared to the same time last year. So you can see huge, still growth all around. In all honesty, I thought we were going to see more growth in the more personal computing, as we saw previous semiconductor companies mention that there's super strength in the computing world. So I'm surprised that there was only 9% growth, but we'll take a closer look at what's happening there. Another thing we can see is, right, all three revenue segments are pretty much very close to each other, especially I want to say a few quarters ago, they were all very similar. Intelligent cloud is just continuing to grow, and it's becoming a bigger portion of this company's revenue. And I do believe that's going to improve the overall gross margins, because intelligent cloud usually has higher margins. If we take a look at just some of their thoughts, right, for cash flow from operations was $22.7 billion, up 22% compared to the same time last year. That is insane. I mean, this company has so much money. No wonder they're buying so money. I'm pretty sure right now we have an influx, or I want to say a surplus of a lot of companies. I do believe in the next few years, we're going to continue to see acquisitions by some of these big giants buying some of these smaller companies, especially when you see cash flow like this. This company also does share buyback. Obviously, they do also pay dividend. For me, obviously a great thing for Microsoft. Not one of the reasons I own it, right? So for those not familiar, Microsoft and Google are both in my portfolio, and that's why I want to take a quick look at their earnings. If we take a quick look at the productivity and business process, Office commercial products are up 20% compared to the same time last year. Office 365 commercial revenue was up 25%. LinkedIn grew 46% compared to the same time last year. LinkedIn sections grew 30% with record engagement. So more people are still using LinkedIn. If we can see this productivity in business, it's kind of seeing a bit of a growth every quarter, nonstop. This quarter was one of the biggest gaps I've seen. Growth ups. It's been in a nice amount of time, so that's pretty cool. If we look at the intelligent cloud is just a beast. This quarter was a huge quarter. I'm surprised Microsoft is only up about 1.3%, but I'm guessing a lot of this was priced in already. Total revenue grew for intelligent cloud 30%, mainly driven by Azure. So server products and cloud services revenue grew 34%. Azure revenue grew 51% compared to the same time last year, driven by strong demand on consumption-based services. So their consumption-based services are something like, let's say, a cloud server company increases the amount of cost the more people they have. So to me, this seems like a bullish sign for clouding companies. And this is impressive, right? Because many people believe that, hey, now that people were going back to working from home, kids were going back to school and everything, you were going to see a slowdown in clouds. But that's not the case here. Now, if we take a quick look at more personal computing, this was up 9% compared to the same time last year, driven by search advertisement. Microsoft does own, for example, Bing, and they do get a form of revenue from there. This is a segment that is up a nice amount. Normally, right, quarter two tends to be the highest for this because this is the holiday season, so they make the most revenue there. But right now, it's up pretty big. They do mention that the gaming revenue is up 11%. Xbox content and service revenue did decline 4%. This is actually, to me, super impressive. Same time last year, more people were at home, so I would have so a lot more people were playing games, right? So for it to only decrease 4%, I think that is super impressive. But it was more than offset, they said, by declines from third-party with growth in the Xbox Game Pass subscription. That subscription, I think, is going to be a huge game changer for the company. Xbox hardware also grew 172% compared to the same time last year. Obviously, same time last year, we didn't have a new console. So Microsoft does say that they are still, they're kind of seeing a constraint in supply chains due to semiconductors, right? So that is a huge reason why the company didn't see much growth in the more personal computing. But hopefully, as things continue to grow there, things could get better. So now let me just share my overall thoughts on both Microsoft and Google. So like I mentioned, I do have both of these companies in my position. I am happy with my overall exposure. I am happy with both these earnings. Right now, I do believe there is better buying opportunities for both these companies. So it all depends, right? I'm happy with my position. I'm happy with the size. So I do believe there's better buying opportunities later on. If I wanted to get some skin in the game right now, after these earnings, they were super strong. I enjoyed them. Maybe just get in with a little bit and kind of increase my exposure over time. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.